Eric Muad with yet another set of Uniformity videos. The idea here is to train our eyes to be able to observe what stocks are doing, and sometimes they do tell us what's about to happen. So let's go to the examples. This is day number 3 of back-to-back explanation of how to use the uniformity in the RSI to tell you what a stock is about to do. Number 1, here we begin with a very nice example of how you can use the previous channel break. So there was a channel on a weekly time frame. This is a weekly chart for Qualcomm, QCOM, and so this weekly chart was violated somewhere around that point, and so you draw a straight line. You see the stock came back to the previous break point and stalled. So whenever you are fortunate enough to see that a stock has come back to a previous break point, you have to be aware that if it starts faltering, then more than likely it's suggesting that there is a drop, or at least showing that it is short-term resistance. So that's the price action. Let's take a look at the RSI based on what we've been covering. So there was a break here of this trend line, which is off the highs, and so we draw a straight line, knowing that in the future, should the stock come and find uniform activity at the line and back below the line, then we have to conclude that that is a sell signal. So about at the end of last week, this was clearly gonna be a buy signal. At the end of last week, this was clearly going to be a sell signal because the stock closed with the price there and the RSI back at the previous sell point on the RSI. We have uniform activity with the move lower, and hence the reason why the stock has come all the way from 78 to 68, or at least one of the reasons why it found resistance around 78. Let's take a look at the daily for Qualcomm. And on the daily, what we are trying to figure out is whether we would have been able to avoid this drop. So we come and find that the high took place. There was a high. This is the high, and the high comes from the previous, if you draw the line like that. The reason why I've drawn the line that way is because this was the initial high, slight pullback, and so that break, we draw a straight line, and to make sure that it makes sense, you can see that we had uniform activity back to the line with a V-type formation and resistance, which actually gave you the actual high. So over the last couple of days, we came and went above the blue line and back below it with uniform activity. So it looks like the market did something like this, which is uniform activity. And the move back below the blue line, which is this move here, was a sell signal about 2 days ago. So if you would have known that that was a sell signal, you would have been very cautious, probably been lucky enough to avoid this drop. Of course, you never know that it's going to drop this much, but this was already a red flag because of that uniformity. Let's go to the next example, and it is Zillow, letter Z. And we can see here over the last couple of days, resistance around the 50-day moving average, actually resistance around the 200-day moving average, while the 50-day moving average is plunging. So that resistance around the 200-day moving average, and also the fact that you have a declining 50-day, was some type of indication that the stock was not very strong. If we take a look at our RSI work, all we have to do is draw a straight line, and ever since we broke below support line here, now this was a line that was established off the lows. This low, that low, that low, and this low gave you a straight line, and the stock has bounced once before on this line, which is here, which is this entry point. It bounced again on the line here, which is this entry point, but the next time it came to the line, it actually fell below the line. So that was your first indication that something different was taking place. Now since then, you'll notice that the stock has come back to the same line, and backtest failure was a sell signal there, and also backtest failure about 3-4 days ago was another red flag. So the fact that it's down 4% today, if you would have used this line on the RSI as a backtest failure point. Once this was confirmed with failure, you knew that the stock was probably poised to go lower. Let's take a look at another example. SZYM. We go back to the highs there. Now the high had come, there was a break previously of this highs at the time. So these were the highs at the time, and so we draw a straight line from that break, and you can see that we came here and made double top resistance, and that gave you this high here. So that high was confirmed by resistance at the previous breakpoint line coming off the initial highs here. So to say this in another way is you have improving technicals to new highs on a weekly closing basis, but the RSI did not move any much further. So we can see that even coming off the highs around 15, the stock was already giving us sell signals from the prior break point, if you draw it like that. And even this point here had been resistance, which is this high back in the day. We also came close to the line there and reversed, which is this high. So a very simple line giving you a lot of information. And most recently we came close to the line here and could not even get enough momentum, enough energy to the line, which was those highs. Now there's another view, is if you take this weekly closing low on the RSI through this low, draw a straight line without any adjustment, you can see that once we broke below this line there, the stock has never been able to move above the blue line, and recently came here with uniform activity. In other words, it touched the line, which is this high around 8, and since then you've seen this plunge. So the RSI work that we are talking about here is consistently telling us, on these examples at least, that when you use it correctly, it can help you get out of some very bad situations. SZYM on a daily chart now, and we can see off the highs there, we find out where the break took place. You see there was a break, depending on how you want to do it, there was a break there, and that break was what gave you the high. We know that for a fact, and we are using the stock itself to tell us how to trade it. So the stock is saying that the break of that RSI is what broke this bullish run, and since then it's moved to fresh lows. So that is what the stock is telling us. And so what we do here at the time is you draw a straight line, and you can see uniform activity above the line and back below it, which gave you this high at about 12 before the drop to $6.550, somewhere in that range. Recently we've seen the stock come very close to that blue line and not even make it up there. So the fact that it came close to the line there and stalled was a red flag, which also happens to be where the 50-day moving average is trading, and that was your guess into suspecting that the stock was not looking good coming into earnings. And after the earnings, you can see what has happened. So that this is the major line to watch. There is another line which is based on the most recent sell point. Here you're using the stock's information, the stock analysis. You're not using the market analysis. You're using the stock itself to tell you how it behaves. And we can see that if we take this break off the highs, short-term highs, and draw a straight line without any adjustment at all, it is telling us that this here, once you found resistance here about 2-3 days ago and you were unable to move above that, that was a red flag. And so this drop is really, yes, the magnitude of the drop is a surprise, I agree, but the fact that it's down is not a surprise. The magnitude might be a surprise. It's always good practice, once you establish a break point, to go back and back test it. And you can see it makes a lot of sense, because once it moved below this blue line on back test, going backwards, sorry about that, I guess I should turn off my phone when I'm recording. Alright, so what I'm saying here is it's always good to back test and see whether the line makes sense on I guess on hindsight, or if we go backwards. So sometimes you want to go backwards in your charts to see whether a line you are using makes sense. And you can see here, if we take, so that was a break. Initially we drew the line that way, but now let's go backwards, and you can see that it makes sense because the break coincides with this break here, and that break is what gave you this move off the highs, and the stock has never been back there. So that is an important break point for the stock itself. And so that line, or the line that we are drawing here, makes sense. And so when we came back a couple days ago and found resistance there, if you were watching that, then you knew that the stock was due for some reversal. Let's go to another, and it is a BIS ETF that inverse the biotechnology space. And I guess what I was wanting to show you here on the weekly chart is just the fact that the stock has moved all the way from 400, coiled all the way low, is now trading in the 50s. So this has been in a bear market for a while. When I go back to the daily, so big drop over the last 2 years. Let's go back to the daily and see what we have. On the daily, we can see that recently it made a high of 70 and pull back. There was another high here at about 75 and a drop after that, and also another high here and another drop. So the stock has been going down, we know that. So let's use the chart to tell us whether we could have avoided this drop and this drop. And it's very easy to see that coming off these highs here, there was a break of this trend line. It's a very simple analysis. You're using the stock itself to tell you how to trade the stock. A break of that, so there was a break there which gave you the movement off the highs, and that should be somewhere there, sell signal. We will draw a straight line, simple straight line without any adjustment whatsoever. You can see that we came here with uniform activity and found resistance, which is this sell point there at about 75. So that was sell signal. Recently we've come all the way back, and with uniform activity it looks like a V-type formation, inverse V-type formation, and we found resistance. That's a sell signal. Since then, that little information was good enough to prevent you or to get you out of the stock at $70, and now it's trading in the 50s. All right, let's go and back test the same line just to see whether the same line made sense. And if we go back to this one point, you can see that uniformity again, uniformity to the line and resistance, which is off the highs here at about 140. So yes, it makes sense. Ever since we have this established breakpoint, it makes sense going forward, and it makes sense going backwards. So that's how you know that that is a legit analysis. So let's say this: in the future, the stock is a buy only when it manages to trade in this area. So down the road, if somebody wants to trade this, you have to be very patient, very patient. In the future, when the stock finally breaks out above this resistance line, so if it ever breaks out above the resistance line, is when you can go long. Right now, this red band here is a problem. It needs to be above that line if it's gonna do well. The point here is that we are using the RSI to tell us how to trade the stock, and the stock itself is telling us how to use the RSI and what levels to draw our line. So that uniformity could have worked wonders there for you. Let's take a look at one more, and it is BJK, and it is the ETF that tracks the gaming sector. Just want to show you that recently it broke below to new lows like that on the weekly. The reason why I'm showing you the weekly is just to show you that the stock is really off its highs at 56, now trading in the mid 40s. And recently we saw a break of a very simple line, was a sell signal there once it made fresh lows, and also the fact that it came back to the previous sell point or sell line and found resistance, making this an obvious area of selling on the weekly time frame. Hope that makes sense. But I was adding this because I want to show you the daily, and the daily, we know this is the high there, and so we have to figure out where the stock broke down. We are using the stock, so on hindsight we can see that this here was the high. figure out where it broke down, and we can see that if we take this break there, this is where it broke down to a straight line. It should look like something like that. We've come to the line on a couple of occasions. Let's test that. We've come here. Now, I didn't do this, you didn't do this, somebody did, or the market did. Uniform activity above the line and back below it. That's usually a sell signal, and that's a perfect sell signal there. We came very close to the line there and found it very difficult to get to the line. That's another sell signal. And recently, or the last couple of days, we came here, we tagged the line with perfect, kissed it, and could not hold. So that was a sell signal about 4 days ago. Okay, so the idea here is just make sure you understand what the stock is saying. So just for the sake of education, if we go backwards on the same line, you can see where it stops perfectly at this high. How this happens, I have no idea, but this was also on hindsight sell signal before this drop. So the line is legit. We've tested the line. It makes sense going forwards from that initial break here, and also we've tested the line going backwards, and it makes sense. So we know the line is legit. Now there's another secondary line I'd like to show you. So there was another high off this high there. You can draw multiple lines, remember, as long as it makes sense. If we draw a line there, there was a break of that trend line, or actually let me draw it correctly. Remember, you can draw this as long as it makes sense. So there was a break there to a straight line, and we are using this secondary line to tell us where the stock could stop, because after this break, which was this RSI break there, so breaking that trend line there, you see the stock plunge, and it makes sense because we've come back to the same line and stalled. So this is a secondary line. The primary line is based on the 52-week high. A major high gives you a major primary line, but even outside of the major primary line, you can get secondary lines like this one here. It's a secondary line because the primary line was the initial line I drew, which is slightly higher. So that secondary line also makes sense, and we can also go back and test the secondary line, which gave us that sell signal. Let's go and test it, because I believe a good system or a good method should make sense going one way and also going the other way. In other words, one of the reasons why I use this method, or one of the reasons that I go backwards, is I've realized that good setups, good strategies make sense assuming that we travel backwards. If we were time travelers and we started trading the market going backwards, it should make sense. Okay, that's one thing I've realized, that a good setup, if you have a good strategy, backtest it going backwards. If it makes sense and is giving you good signals, then that strategy makes sense. Otherwise, it doesn't. It's not as powerful. And if we backtest it, we can see it gave us uniformity there, which was a short-term high, uniformity there, which was the main high, sell signal here, which is a short-term high. So the line, even the secondary line, makes sense. Now, since this is a series, we are so deep into this series, this video should have made sense. Eric Mwade, good luck, peace, and blessings. Woo!